Hi guys, in this video I'm going to show you how I secured a 17R trade. And for those of you that don't trade in terms of R, 17%, assuming that you take a 1% risk. So I'm going to walk you through how I use a combination of smart money concept and RSI divergence to really get a pinpoint sniper entry, as you can see on the screen here. So without further ado, let's go. Hi guys, I'm Andy, aka the NocTrader, your friendly neighbor swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. So last week I took a trade. I actually took quite a lot of trades, so I'm actually down on the week, even though I took this really superb trade. But I don't want to talk about some of the other trades I took. I want to talk about this one because this was a really good trade. Everything was as it should be, and I used a combination of two strategies. I used the Vertex smart money concept strategy to really get my entry, but then I also, in Confluence, use RSI Divergence. Now I'm going to talk you through the thought process behind taking this trade right now. So I'm going to start from the weekly chart because I always do a top-down analysis first. And as you can see on the weekly chart, price had broken out. This is USDJPY. Price had broken out of this support line, this resistance line, and it broken out emphatically. Now, what I'd expect next is probably a retracement and a pull-up, but we don't make assumptions here. So on the weekly chart, you can see there's a breakout. So that's what I could really say for now on the weekly chart. On the daily chart, you can see, once again, you can see the breakout. There's a pullback, and then there's a shoot up again. So right now, we're making higher highs. As you can see, there's a higher high, lower high, higher high. So it wouldn't be remiss to think that it would probably make another higher high again, because right now we're still on a bullish path. What I then did was mark the most recent low. So if price broke this low, then we'd be in a bearish move. But right now we're still in a bullish move as long as price stays above this line. So then I moved to the 4-hour chart. Now on the 4-hour chart, I was looking for order blocks to take a long from. So there was a couple of order blocks that I saw that could potentially be where I could take a long from. Let me mark them up here. So there's one order block here. As you can, I chose this order block because there was an impulse move up that broke this structure. So there was a breaker structure here that caused this impulsive move. So this was an order block of interest on the 4-hour chart. This could also potentially be seen as an order block here because the same thing happened. It was a breaker structure and it was an impulsive move. The only reason why I didn't look at this one was because at the beginning of the week, price was already reacted to that order block. So I wanted to see a breakout and a retest before shooting up. So then I would have taken a long here, but this was the order block that I wanted to look at as a potential pullback. So I deleted this one here. Now I went down to the 1-hour chart and I could potentially refine this order block. So what I was doing was that I could have refined it a little bit more, but I just wanted to wait for price to react to this 4-hour order block before I made the decision. Actually, did not do that. What I did after that was that I looked at the RSI. Now this is where Confluence comes in. Knowing several different strategies can also work in your favor sometimes, because now you can align different strategies together, and if they're telling you the same thing, then that can be a strong confluence for making a decision. Now right now RSI wasn't really showing me much, so I just left it as it is. But right now what I was looking for was like a bullish divergence, so where the RSI is coming down but it's coming down at a slower pace, and then I could create like almost like a support line below the RSI, but nothing really was showing me bullish divergence at this point in time. So I'm gonna minimize the RSI right now. So now I'm just gonna let it play out on the 4-hour chart and see what happens. So now price had reacted to this order block. So price had reacted to the 4-hour order block. This happened on the 22nd of February, and at that point went back down to the lower time frame to now look for a kind of sniper entry. So price will react to this order block. So what I'm looking for now is for something like this. And at this point is where I would make my entry. And then my take profit would be at equal highs. I'd want it to retest the highs. So let me delete these lines here. Let me delete these lines here. And then I'll show you what I did next once it reacted to this 4-hour order block. But now let's bring the RSI back up. So what I was seeing here at the RSI is stuff that I've seen before, where there was like a bullish divergence. Now, so if I added Confluence, I checked the RSI to see if there was a bullish divergence. Now, what a bullish divergence shows you is when the RSI indicator is trending downwards by a slower velocity, but price action is showing higher highs. then that's normally a sign that price is going to probably climb again. So all we're trying to do is find the point at which the reversal is going to happen. Here's a chart that I refer to quite a lot and I share with my friends. This is just one I look at just to show me what bullish and bearish divergence is. So as you can see here, if the indicator is making lower lows but price is making high highs, then there's a likelihood that when the indicator is at a point where it's at a new low, price is going to reverse as well and make high highs. And so this is what I was looking for here. This one on the bottom left is kind of what was, as I was seeing with USDJPY. So the combination of both price action and a bullish divergence on RSI made me quite confident that price was going to reverse at this point and make a high. But now I had to look for a good entry point. I could have done one or two things. I could have taken a risk entry here and just taken a long here. And to be honest, that would have been a pretty safe bet to do. I could have just set my stop loss just below the order block and then set my take profit at equal highs. And that would have given me something about 8R. So 8R, so whatever I risked, so if I risked £100, that would have made me £800, for example. That would have been 8R. But I wanted a better entry so I could really squeeze more out of this trade. So what I did was that I went down to a lower time frame. So then I went down to the 5-minute chart and I tried to look for a really good entry point for me to take my long at. So what I did was that, well, I'm playing this replay tool now just to show you where I found my entry on the 5-minute chart. So what I was looking for was a breakout and then a retest of an old order block, and then I would have got in. As you can see here, price is still kind of lingering. It hasn't already made the decision yet, but I'm not surprised given the time of day it was. This was at like kind of the worst time to trade, to be honest. This was at around 10 o'clock, which is that the spread hour where just price has ridiculous spreads, but I still saw opportunity, so I was just waiting for it. Once it got past 11, then the spread hour kind of closes, I believe, and then we just wanted to see where I could find a good entry point. Let me fast speed this up because I can't be here all day. So we saw our first impulse move here. So now I thought, okay, yeah, this opportunity, maybe I can enter here because this price has impulsively moved up. As you can see, this is around 7 AM. So obviously the markets are getting a bit more active now that it's near the UK, the London Open. And that's where I took my long. I took my long here. Set my stop loss just below this area and set my take profit at equal highs. So that would have been 17R I took. And then I just let it play out on a higher time frame, and it just went to the moon, as they say. Well, that's what the crypto people say. Now I like to be honest, and I didn't hold it all the way to equal highs. I kind of lost my nerve a little bit when it was around here, so I think I took about 14R or something like that. But at the end of the day, it was a good trade, and the potential was to make the whole 17R. And what I just wanted to show here was just how I used a combination of the smart money concept, the Vertex pinpoint entries that they use in the Vertex method, and also RSI Divergence, just to collaborate all of these different, show confidence basically. Confidence is a really strong way of identifying not only entries but just to confirm entries as well. So that's, I just thought I'd show you how I used two different strategies together to confirm a move. It's always great when you have different strategies that tell you the same thing. And as you can see here, that brought me a 14R return on a trade just by finding confidence from a trade that was making higher highs, finding the order block, and then checking the RSI to see if it was telling me the same story.